Hello fellow traders, this is another tutorial video on our series on trading. As we have mentioned many times, we are trading our real account for the past years. For the purposes of this series, all profits go to my subs, so stay tuned, subscribe, like, leave a comment for the YouTube algorithm. I got many messages the past period to cover the ADX. Since we will cover all the indicators in this series, we will give it a look in depth, as we'll do with all indicators. Also some experimental indicators, as I promise to present you, that looks promising. Let's say ADX stands for Average Directional Index, created by J. Wells Wilder in 1978. Probably you've heard him a lot, at least people that are already trading. He's also the creator of RSI and parabolic. At the same period, from 1980s, let's say, we have some standard values considered to be common knowledge back then. Is the time of automation. Some electronically arranged data starts to appear in trading that make life easier for traders, because you need to understand that it was not so easy to trade back then. I mean, there were no data on a chart, and you could just hit a button and change the time frames and so on. That's why traditionally we have the daily and the weekly, let's say, candles. At least this is how they start from the beginning. Now today, with algorithmic trading, we are doing thousands of trade in a fraction of a second, let's say. So this is just to understand how this indicator works. The formula, I'm also giving a description below on how you can find the basics in every single value related to that formula. You don't have to memorize it for every indicator. This is useless. It will automatically pop up in your platform. There are two versions of the indicators. A single line, let's say, the simple ADX, the average directional index, and the other one is another version with 3 lines. They are not so different. However, we will give explanations for both of them. I will open my charts as we do every time. We will check in live markets. Today we don't have any live markets because it's weekend, and finally we can do some back testing and check our trades, let's say. So the basic idea you need to understand in order to calculate the directional index, the base formula, we have the positive DI and the negative DI. The positive DI is the positive directional index. The negative is the negative directional index, smoothed. The positive DM, the negative DM, the current highs minus previous low minus current lows, smoothed by a period of 14. Now someone will ask, okay, why 14 and not 17, 32, 50 to 10, whatever. This is the heart of the indicator, and like every indicator, there is no such a holy grail. There is no such a perfect tool when you are trading in a strategy, let's say, because many people claim that can beat the market. Of course, this is why I have created this series, because there are a lot of gurus and scammers out there that claim can beat the market. However, they have zero proven trading history. That's why I am starting the Forex debank to give people, let's say, a glimpse that there is no such a thing. When you are trading, you are plotting an indicator. You are arrange the values somehow. You change the basic values, either the periods, whatever it comes in your mind. Maybe it's not smooth. Maybe you might use a true range, not 14, but a true range of 15. You might use the open high low close divided by 3 minus previous open low high close, something like that. You think we are wasting your time in making this kind of adjustments. We did that. We did this kind of adjustments in every indicator, trust me. Thousands of trades in the past year's period. You are looking at the wrong direction. in your trading strategy. There is no holy grail. Do not expect, just plot an indicator and to win the market. This is ridiculous. No one can do that. People that claim can do that, we test them. So far, we haven't found anyone that could even be close and be profitable. We are just searching for who is losing less, but none of them is profitable so far. I cannot test all these million strategies. No, I'm just testing based on some criteria, ideas, and also to give you an idea of what's happening out there. The trading, it's a marathon. We know that. We know that we cannot beat the market so easily because you are making, let's say, an adjustment in your indicator, and it suddenly appears that it fits perfectly in your chart. And this is the trap. You believe that also it will happen in the future. It won't. Momentarily, it might work for a given period. That's why, again, you are get confused, and in your mind pop-ups up that, okay, maybe I need to make some other adjustments. Maybe I need to take in consideration other values. Maybe I need to use golden ratio numbers. Maybe I need to use golden ratio proportions. Maybe I need to use something else based on the weekly, based on the Monday opening, based on the London opening, and so on. And this starts to comes the confusion in trading. If you are in that direction, I can guarantee you are in the wrong place. There is no such a thing, at least so far. However, you need to use an indicator because this makes you feel more comfortable in your trading, and this is why I believe most people use indicators. Do not search for something fancy. Also, I'm explaining this. The ADX indicator is just an indicator for me. We will give a depth in this indicator, how it works. We will check the pros and the cons also. I just want you to understand the main idea. Now I will open my MT4 platform, and we will see the indicator, some pros and some cons. Let's see the indicator in real markets in MT4. I have opened here the Aussie, the Australian. We will jump in the daily chart or the 4 hours, it doesn't matter. These are I have already plotted the indicator, the ADX. These are some major levels that you will also need, because remember what I've said to you. ADX doesn't count the direction, let's say, of the markets, of the direction of the prices. It's an indicator that measures how strong is the trend. Of course, it's not perfect. That's why we are here. We'll give you some pros and some cons, and we'll also check some breakout secrets that actually they are not secrets. I mean, you have to pay attention to the details. So this is our major line, let's say, our major ADX line. Everything above 25 signifies, it's the signal that the market will start trending. When the positive DI, the positive directional index, comes at this point above the red line, let's say, the market will start trending up. So actually, we have the ADX above, the green, it's ready to go, so we are on a buy signal, and this is the opposite. Again, we still have a strong trend. Now, at this point, the opposite. The negative DIs come into, let's say, in control. So this is the time to stop our trade. Our fellow trader again feels very lucky. However, this is not the point. The reason is that I choose a trend, a specific time in the chart that this work. So you don't have to rely so much. Indeed, based on what I've told you, that it's an oscillator that measures how strong is the trend, probably you can trend with it. However, there are some cases that the market will ragging, so the indicator will closes several times. There is no indicator that will work at this point. However, based on our videos and everything that we have said so far, when the market consolidates in an area, it's ready to jump, to make the move. It's building momentum. This indicator will help you if you are already identify a trend and you manage to identify a wave, let's say, and you are willing to jump into a trade. Always follow the direction of the trend, as we said. This is some pros. Everything above 25, now that's why I have used some multiple levels here, considers that the market, our major line, the market is trending. If you check the values of the indicator, the period is 14. Again, I said that you can change the values. The more values you put, the smoother your indicator become. By default, it's the 14. Here is applied to the closed. You can use any single value. You can use the typical prices, and you see that the direction, the indicator changes completely. So the major levels, let's say, that you need to pay attention is this 25, 50 and 70. 70 is when we are having a very high trend, let's say. I will try to zoom back in the, I think here is a 75 value at this point. And of course, you can see the false signal already. Not a false, I mean a signal that it's already too late. Because when you're at this point and there's a downtrend, probably you're looking to go short. Very important, the whole idea, the major idea of this indicator when you are start trading, it's to understand the basic values and how to make it work, let's say, properly. Unfortunately, there is no holy grail. I will jump to the UP, to the Euro Yen, to show you a very important breakout and explain what happened. Because sometimes people showing the diagrams, but they are not explaining what is the basic behind your entity. So my basic, as we are checking on the Euro Yen, we have two major currencies that are related with that pair. We have the Euro USD and the USD Yen. So every tick, every move from the one pair and the other immediately will affect the Euro Yen. Now, that day that we have the breakout, there is no indicator in the world that could predict that. And why? Because we have hawkish news, let's say, from ECB. Also, the Bank of England changed interest rates, which correlates with euro. We have that movement on euro. If I remember correctly, it was 1.48%. I'm not quite sure about the numbers. USD yen went high at 0.47%, which is a huge move. Well, not huge, it was a big one. So imagine what will happen to the euro yen if both of the pairs, both of the majors were high. This will multiply the value, let's say, in the euro yen. That's why we hit the breakout. Do not get confused when you see this kind of breakouts and this kind of anomalies in your chart. Make sure you check what happened historically. Do not trade also when there are some huge events. I'm not mentioning the non-farm payrolls. They are important also, but interest rate decisions and some major events will eventually affect your entity and your trading. Well, of course, if stocks, check for the company news, check for the industry and so on, but we are referring on some major pairs, let's say. And of course, this analysis, this indicator analysis, show what probably can happen in the market. The market can be unpredictable, and there is no indicator in the world that can predict the future prices yet. I'm afraid. I hope you enjoy the video. I try to be very tight. Thank you very much. Trade safe, and I hope I'll see you in the future.